Are you ready to take control of your financial future and start building wealth? If so, then you've come to the right place. In this video, we'll guide you through the top priorities for investing your money and help you make smart, informed decisions about where to put your hard-earned cash. 1. Build an emergency fund. An emergency fund is a cushion of cash that you can fall back on in case of unexpected expenses or financial setbacks. Imagine you lose your job, or your car breaks down, or you have a medical emergency. An emergency fund can help you weather these storms without having to rack up credit card debt or borrow money from others. But how much should you have in your emergency fund? A good rule of thumb is to set aside 3 to 6 months of living expenses. This may seem like a lot of money, but it's important to be prepared for the unexpected. Start by setting a savings goal, and then make a plan to save a little bit each month until you reach it. You can keep your emergency fund in a high-yield savings account or a short-term investment vehicle, such as a money market fund, so that your money is safe and accessible when you need it. Building an emergency fund may not be the most exciting way to invest your money, but it's an important foundation for your financial stability. So don't neglect it. Start building your emergency fund today, and you'll be glad you did in the long run. 2. Pay off high-interest debt. High-interest debt, such as credit card balances and some types of loans, can drain your financial resources and hold you back from reaching your financial goals. The longer you carry this debt, the more you'll end up paying in interest charges. But how do you pay off high-interest debt? One way is to set up a budget and cut back on non-essential expenses so that you can free up more money to put towards your debt. Another strategy is to make extra payments on your debts, starting with the one that has the highest interest rate. You may also consider consolidating your debts into a single loan with a lower interest rate, which can make it easier to manage your payments and pay off your debt faster. Paying off high-interest debt may not be the most glamorous way to invest your money, but it can save you a lot of money in the long run. So don't ignore it. Start working on paying off your high-interest debt today, and you'll be glad you did. 3. Save for retirement. Even if you're young and just starting out in your career, it's never too early to start thinking about your financial future. The earlier you start saving for retirement, the more time your money has to grow, thanks to the power of compound interest. But how do you save for retirement? There are several options to choose from, including 400 plans, individual retirement account IRAs, and pension plans. Each option has its own set of features and benefits, so it's important to do your research and choose the one that's right for you. Saving for retirement may not be the most exciting way to invest your money, but it's an important step towards financial security in the long term. So don't put it off. Start saving for retirement today, and you'll be glad you did when it's time to enjoy your golden years. 4. Consider other investments. Once you have taken care of the basics, building an emergency fund, paying off high-interest debt, and saving for retirement, you can start thinking about other ways to invest your money. There are many options to choose from, including stocks, real estate, and small businesses. Each type of investment has its own set of risks and rewards, and it's important to do your research and diversify your portfolio to minimize risk. One way to invest in stocks is to buy shares of individual companies or mutual funds, which are baskets of stocks that are managed by professionals. Stocks can be a volatile investment, with prices fluctuating based on market conditions and company performance, but they also have the potential for high returns over the long term. Real estate can be another lucrative investment option, whether you're buying a rental property or flipping houses. Owning real estate can provide a steady stream of income through rental payments or appreciation in property value. However, real estate also comes with its own set of risks, such as fluctuations in the housing market and the cost of maintenance and repairs. Small businesses can also be a rewarding investment, whether you're starting your own business or investing in someone else's. Owning a small business can provide a sense of accomplishment and the opportunity for growth and success. However, small businesses also come with their own set of risks, including the potential for financial loss and a high level of responsibility. Investing in stocks, real estate, and small businesses can be a great way to grow your wealth. But it's important to do your due diligence and carefully consider the risks and rewards before making any investments. Working with a financial advisor or professional can also help you make informed decisions about your investments. 5. Protect your assets with insurance. We'll get to that in a second. I have a favor to ask of you. If you like this video so far, please subscribe to the channel. Insurance can provide financial protection in case of unexpected events, such as accidents or natural disasters, and help you safeguard your hard-earned assets. There are many types of insurance to consider, depending on your needs and circumstances. Homeowners insurance can protect your home and possessions in case of damage or loss, while car insurance can provide coverage for your vehicle and protect you from liability in case of an accident. Health insurance is another important form of protection, helping you pay for medical expenses and protect your financial well-being in case of illness or injury. But how do you choose the right insurance for your needs? It's important to shop around and compare different policies and rates to find the best coverage for your money. Don't be afraid to negotiate or ask for discounts. And be sure to read the fine print and understand what is and isn't covered. Protecting your assets with insurance may not be the most exciting way to invest your money, but it's an important step towards financial security and peace of mind. So don't neglect it. Start shopping for insurance today, and you'll be glad you did in the long run. 6. Set financial goals and create a plan. Whether you're saving for a down payment on a house, paying for a child's education, or planning for retirement, having clear goals can help you focus your efforts and stay on track. But how do you set financial goals and create a plan to achieve them? One way is to start by thinking about your long-term vision for your financial future. What do you want to accomplish? And how much money do you need to get there? Next, break your goals down into smaller, more manageable steps. For example, if you want to save for a down payment on a house, you might set a goal to save a certain amount each month or each year. Once you have your goals in place, it's important to create a budget to help you manage your money and stay on track. A budget can help you prioritize your spending and saving, and identify areas where you can cut back or save more. Don't be afraid to make adjustments as needed. Your budget is a living document that should evolve as your financial situation changes. Setting financial goals and creating a plan may not be the most exciting way to invest your money, but it's an important step towards financial success. So don't neglect it. Start setting your financial goals and creating a plan today, and you'll be glad you did in the long run. 7. Stay informed and seek professional advice. The financial world is constantly changing, and it's important to stay up to date on market trends and changes that could affect your investments. One way to stay informed is to read financial news and publications, such as newspapers, magazines, and online sources. You can also follow financial experts on social media or sign up for newsletters to stay in the loop. In addition, you can consider taking a financial education course or attending seminars to learn more about investing and personal finance. Seeking professional advice can also be a valuable way to make informed decisions about your investments. Working with a financial advisor or accountant can help you understand your options and make the best choices for your situation. These professionals can also help you create a financial plan and provide guidance as you work towards your financial goals. Staying informed and seeking professional advice may not be the most exciting way to invest your money, but it's an important step towards financial success. So don't neglect it. Start staying informed and seeking professional advice today, and you'll be glad you did in the long run. 8. Invest in yourself. That brings us to the sponsor of this video, the Frugal Living Handbook. Our comprehensive ebook covers everything you need to know about living a frugal and rewarding life, including creating a budget, identifying areas for cost cutting, and much more. Order our ebook via the first link in the video description and start your journey towards financial stability and security. Now let's get back into the video. Whether it's through formal education, training programs, or self-study, investing in your own education and skills can increase your earning potential and open up new career opportunities. But how do you invest in yourself? One way is to pursue a degree or certification in a field that interests you or that has good job prospects. This could be through a traditional college or university, or through online or distance learning programs. You might also consider taking courses or workshops to learn new skills or improve existing ones. In addition to formal education, you can invest in yourself by staying up to date on industry trends and best practices. This could involve reading industry publications, attending conferences or seminars, or networking with professionals in your field. Don't be afraid to seek out mentors or advisors who can provide guidance and support as you grow and develop your career. Investing in yourself may not be the most exciting way to invest your money, but it's an important step towards building a fulfilling and successful career. So don't neglect it. Start investing in yourself today, and you'll be glad you did in the long run. 9. Plan for tax ease. Understanding your tax bracket and taking advantage of tax deductions and credits can help you keep more of your hard-earned money and maximize your financial well-being. But how do you plan for tax ease? One way is to understand your tax bracket and the tax rates that apply to your income. This can help you make informed decisions about how to structure your investments and income to minimize your tax burden. You can also consider taking advantage of tax deductions and credits, such as deductions for charitable donations, mortgage interest, or retirement contributions. Working with a tax professional, such as a certified public accountant (CPA), can also be a valuable way to plan for taxes. A CPA can help you understand your options and make the best choices for your situation. They can also help you prepare your tax returns and ensure that you are taking advantage of all the tax benefits available to you. Planning for taxes may not be the most exciting way to invest your money, but it's an important step towards maximizing your financial well-being. So don't neglect it. Start planning for taxes today, and you'll be glad you did in the long run. 10. Monitor and review your investments. Regularly reviewing your investments can help you ensure that they are still aligned with your financial goals and risk tolerance, and make adjustments as needed to manage risk effectively. But how do you monitor and review your investments? One way is to keep track of your portfolio and monitor its performance over time. This can help you identify any changes that might affect your investments, such as shifts in the market or changes in company performance. You can also consider reviewing your asset allocation and making adjustments as needed to ensure that you are diversified and managing risk effectively. Another important aspect of monitoring and reviewing your investments is staying patient and avoiding the temptation to make impulsive or emotional decisions. It's important to remember that investing is a long-term game, and that short-term fluctuations are a normal part of the market. Don't be swayed by the hype or panic. Stay focused on your long-term goals and make decisions based on sound analysis and research. Monitoring and reviewing your investments may not be the most exciting way to invest your money, but it's an important step towards maximizing your financial well-being. So don't neglect it. Start monitoring and reviewing your investments today, and you'll be glad you did in the long run.